Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best stocks to buy right now. Professionals are buying up these stocks, and hedge funds are also doubling down on these stocks so they can double down on their high conviction plays in case the stock market crashes or downtrends. So in this video, we're going to look at the top 10 stocks that hedge funds are buying, and this video is going to be part 1 of 3. So each video, we're going to go over 10 of the best stocks to buy right now on the stock market. So for more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment down below your favorite stocks to buy, and without further ado, let's get right into today's video. So the first stock we're going to talk about is AbbVie, ticker symbol ABBV. And AbbVie is a research-based biopharmaceutical company that is involved with the development, manufacturing, and even the commercialization and sales of various medicines and therapeutics. The current stock price for the company is $160 per share. The low-end analyst price prediction for the stock is $115. The high-end price target for the company is $172, while the average price consensus for the company is $152. Around 27 analysts currently cover this stock, with 20 of them saying to buy the company, while 7 of them say to hold the company. Now, I personally like this company because it has a very high dividend yield of 3.32%, which is fantastic, especially if you want passive income while you sleep. Out of these 10 companies, I will also have a check mark against the companies that I am personally doubling down on. So this check mark is going to signify that although all of these companies are completely fantastic companies to own, I personally really like the companies with a check mark next to them, and those are the companies that I own the most of. So with that being said, our next company is going to be NVDA, ticker symbol NVDA. And this company is most known for their artificial intelligence computing, along with their giant graphics segment, which includes GPUs. Right now, the company's stock price currently trades for around $271 per share. The low-end analyst price target for the company is $177. The average price consensus among professionals is $341 for the next 12 months, and the high-end bullish price target is $400. Right now, 48 analysts currently cover the stock, with 40 of them saying to buy the company and that it's a fantastic deal right now. 7 of these analysts say to hold the company, while 1 of them says to sell. And although the stock price for NVDA is rather high, I personally am going to wait for a slight pullback in the stock before I invest more into this company. And they do have a slight dividend yield of 0.06. Now, our next stock, we're going to run into our first checkmark stock, and that's going to be in red. And of course, this means that I am very bullish on this company, and that although all of these companies are fantastic in my opinion, I am really pumping in money into these stocks with checkmarks next to them. And the first one with the checkmark is going to be ServiceNow, ticker symbol NOW. And this company is a digital workflow company. So the company has a cloud-based platform and various solutions that deliver digital workflows for employees as well as entire commercial enterprises. Their services can be marketed to enterprises in a plethora of various industries, including government, financial services, healthcare, manufacturing, oil, gas, technology, and education. And that's why I really like this company overall. Right now, the current stock price sits at around $567 per share. The low-end analyst price target is $466. The average price consensus for the company is $683, while the high-end bullish price prediction is $850 per share. And although I normally really like buying companies below the low-end analyst price target because I think that gives us the best margin of safety and it's definitely the most safe option, I really like this company, and I think it's going to continue to appreciate very nicely in price. Around 36 analysts cover this stock, with 35 of these analysts saying that this company is a clear buying opportunity right now, with only 1 of them saying to hold the company, while no analyst that I could find from my research says to sell the company. Also, this company does not give out a dividend. It's a full-fledged growth company, which is why I personally really like this company, and I think it's just getting started. Next up, we have none other than Johnson & Johnson, ticker symbol JNJ, which currently sits at a stock price of around $175. The average price consensus for the company is $186. The low-end price target among analysts is $163, while the high-end price prediction goes all the way up to $215. If you didn't know, Johnson & Johnson is a holding company which engages in the research as well as the development, manufacturing, and the sale of a multitude of healthcare products because they are very integrated in the healthcare field. They also give investors a fantastic dividend yield of 2.42, with 20 analysts currently covering the company, with 11 of them saying that the company is a good buying opportunity right now, while 9 of these analysts actually say to hold the company. So if you want passive income, Johnson & Johnson and AbbVie are fantastic investments in my personal opinion, along with a plethora of other investments, which leads us to our next stock, which also has a check mark next to it, and that is none other than T-Mobile, ticker symbol TMUS. T-Mobile, if you didn't know, is a wireless communications service provider that is extremely integrated in the communications space. This company does not have a dividend yield, unlike AT&T, which has a fantastic dividend yield, while the current stock price is only trading for $125, which is very cheap in my opinion, because the low-end analyst price target is $128. The average price consensus is as high as $164, while the bullish price prediction is $205 per share. 33 analysts currently cover this stock, with 29 of these analysts saying to buy this company right now. 3 of these analysts are saying to hold the company. I love this company. It has a great growth trajectory. It has future stock price appreciation, and I am very bullish on this overall company. However, what company do we have up next? Well, the next company can be slightly controversial. It's Twitter, ticker symbol TWTR. The current stock price for Twitter trades at $38 per share. The average price target for the company is $44. The low-end analyst price target is $30, while the high-end price prediction is $77 for the next 12 months. Twitter, if you didn't know, is a social media company, and they make a load of revenues from advertising on their social media platform. At this time, 41 analysts cover this stock, with 11 of these analysts saying to buy the company, 25 analysts actually say to hold the company, and 7 analysts actually say to sell the company. So this will all come down to how you view Twitter. However, with that being said, hedge funds and professional investors are buying this stock up at a very rapid rate, including all of the other stocks on this list. But as we go one by one, the next company is owned by more hedge funds or professionals than the previous company listed. Which brings us to our next company, which is of course one of my favorite companies, which is Thermo Fisher Scientific Inc., ticker symbol TMO. The current stock price for this company is $571, which I think is an absolute fantastic deal because the low-end analyst price target is as low as $605, which I already think is low, and because the current stock price is trading below the lowest analyst price target, I think that this is a fantastic buying opportunity, and I think it's a fantastic company, both financially and fundamentally. The average consensus price target for the company is $689, while the high-end bullish price prediction is $745. This is also backed by around 26 analysts that cover the stock, with 23 of these analysts saying to buy the company because it's a fantastic buying opportunity right now, while 3 of these analysts say to hold the company, and none of these analysts say to sell the company. It also has a slight dividend yield of 0.18. If you didn't know, Thermo Fisher Scientific Inc. develops and manufactures, on top of sells, a range of products, and they do this through 4 main segments: their Life Sciences Solutions segment, their Analytical Instruments segment, their Specialty Diagnostics segment, and their Laboratory Products and Services segment. So to me, this company is extremely diversified. They have 4 main revenue streams, and overall, this company is extremely financially sound, and I also love the fundamentals on top of the leadership of this company, which is why I gave it this check mark, and it's a company that I am extremely bullish on. Next up, we have United Health, ticker symbol UNH. This would be another company that has a very strong dividend yield of around 1.11. The current stock price for United Health is $510, which is higher than the low-end analyst price target by a large margin, which comes in at only $360. The average price consensus for the company is $527, while the bullish price prediction among analysts regarding the next 12 months of stock price appreciation is $576. At the time of this video, 28 analysts cover the stock, with 24 4 of these 28 analysts saying that this company is a good investment opportunity, while 4 analysts say to hold the company and none of these analysts say to sell the company. This company is an extremely diversified healthcare company, and they also operate through 4 main segments. They have their United Healthcare segment, their Optum Health segment, as well as their Optum Insight segment on top of their Optum RX segment. So this is another very financially stable company. I love this company, however, I just don't love them as much as the other companies that I have checked on this list. But again, I want to reiterate that every single company on this list is a fantastic buying opportunity if you get in at a good price, because fundamentally, to me, all of these companies are financially and fundamentally sound. And like I mentioned earlier, every time we move on to the next company, more professionals and hedge funds actually own this company more than the previous one. Speaking of the next company, we're going to talk about Adobe, which is another company that I absolutely love, which is why it has a check mark next to it. If you didn't know, Adobe is basically a mega software company and corporation. This company has 3 main business segments: their digital media segment, their digital experience segment, and their publishing segment. Overall, I love this company and I think it's fantastic. I also think that this company is trading at a substantial discount right now, and I also want to mention that this company doesn't have a dividend yield. Currently, it's trading only at $429, while the low-end analyst price target is $455. So to me, this gives us a fantastic margin of safety, and this is why I personally am continuously buying into Adobe right now. The average price estimate for the company is $617 in the next 12 months, while the high-end analyst price target is $750. Out of 31 analysts, 25 analysts say to buy the company, while 6 of them say to hold, while none of these analysts say to sell. Again, I want to emphasize that this has a check mark next to it. I love this company, and I am buying more because I think it is way oversold right now due to its recent sell-off. Lastly, we have another controversial stock, which will be Wells Fargo & Company, ticker symbol WFC. Now, the reason this is on this list is because although interest rates are rising, this is actually going to benefit banks in some instances, because as the prime rate increases, banks and finance institutions are also going to increase their interest rates to offset some of their expenses. And although this means that less loans could be generated because of the higher interest rates, at least they'll be able to offset some of this expense of losing some loans. The current stock price trades for around $51 per share, and again, if you didn't know, this is a bank holding company, so if you can find a really good bank to invest into, this could be a good buying opportunity. However, I personally think that there are other banks that outperform Wells Fargo 10 to 1. However, with that being said, it does give us a decent dividend yield of 1.4, and it's also trading at a decent discount according to analysts. The reason for this is the low-end analyst price target is 54, while the current stock price is 51. The average analyst price target is 62, while the high-end analyst price prediction is $72. 28 analysts currently cover this company, and 21 of these analysts say it's a good buying opportunity, while 7 of them say it's a good holding opportunity. I also want to mention that for more videos like this one, remember to go and smash that like button right now, subscribe if you are new, stay tuned for the next 2 parts of this video series, and I will see you in the next YT video.